What is up, guys? I'm back yet again with another one. Today, I'll be discussing exhaustion. All right. So exhaustion is an element of momentum. All right. So personally, I assess momentum and exhaustion when I want to execute my trades. So for example, let's say this is a key point of interest where we have marked up on our charts to say we want to buy and we're waiting for price to arrive in here. So let's draw quickly. Let's say price is moving in a downward trend fashion towards our key point of interest. All right. So now that price has arrived in our key point of interest for buys, that does not signify that we execute a buy trade automatically just because it has arrived here. We rather wait for price to show signs of exhaustion before we enter the trade. All right. So the reason why we have to wait for price to exhaust is that there are liquidation pressures that occur at key points of interest before the real move occurs. All right. So for you not to be trapped and for you not to be an early buyer, you need to make sure that the price is exhausted and then you're catching the entry at the right time and you're going with the price action that will keep you in profits. Okay. So another thing, I want you to view price moving down in this fashion towards your key point of interest like a train. Okay. So this is a train moving from this station here to our destination, correct? Right? So while it's moving, you can see that obviously the train will start applying its brakes somewhere around here because a train does not halt immediately when brakes are applied. This is because it is carrying all this momentum. For the example of a train, it has heavy loads of trailers behind it, following it, right? So if it stops like this, it wouldn't make sense. It doesn't make mechanical sense. So this is the train moving down. And when it is finally halting here, there will definitely still be some momentum coming from the trailers behind, correct? And so this is what causes the liquidation pressures that arise in this zone. Okay, so it's very important for you, in other words, to make sure that the market is exhausted before you enter a trade. In fact, all the patterns that are traded in here just show exhaustion. A head and shoulder pattern that you could look for in here, a trend line break pattern that you could look for in here, or any entry confirmation really is just a sign that the market is exhausted from this selling pressure and is ready to now go up. All right. So now let's quickly look at live chart examples of how we would have entered some trades after analyzing exhaustion. Okay. So let's clear the drawings real quick. All right. So in front of me, I have this type of market structure. If you've been following me, you know that I really value the Dow theory, which states that the market will continue trending up for as long as the preceding structure is not broken. If you don't really understand the Dow theory, I advise you to watch all my other videos. So what do we have in this market currently? Mind my drawings. I'm not an artist, but I do what I can. So this is a high. We have a higher high over here. All right, a higher high over here and a higher high. This is an uptrend market because we have higher highs and higher lows. So in an uptrend, our key points of interest will always be the lows, especially the order blocks in the lows. Okay, so right here, I would say this was my key point of interest. When this candle initiated the break of this high, we would have marked this as our key point of interest in anticipation that the market will come back, then we buy. All right, similarly, over here, when this high was taken out, this order block at this low becomes our key point of interest for buys. So we stretch the zone out. So as you can see, our key point of interest has been respected. And this is the daily time frame. Remember, we look at this market structure on the H4 time frame and above so that we can catch big moves. Okay. So now this key point of interest has been respected, right, on the daily chart. But now we need to ask ourselves, how would we have entered the market? Because we don't place entries on the daily chart, obviously. We place entries on the lower time frames. And like I said, exhaustion is a very, very big element of your entries. All right. If you want to make a good entry, you need to make sure that price has exhausted. Okay. So now let's quickly look at this key point of interest and see what I'm talking about. So this is the lower time frame. Price has arrived at our destination at the train station and we want to buy the market. Now look at it this way. The person who bought here saw that price has arrived in the key point of interest. He bought because he has read a textbook that says if you see a bullish engulfing candle, you buy, which is just definitely nonsense. You don't buy instantly like that because there's still momentum, selling momentum coming in here. And henceforth, he bought, he must have had 1 hour of profits and then he got liquidated, right? Because he didn't assess the fact that there's still selling momentum coming in here that needs to be cleared by our key point of interest in here. So rather, why not wait for exhaustion to occur so that you know that your entry is ripe and you have the best entry? Okay, so like I said, a trend line break is one of a confirmation that you can look for in your key point of interest. So here you can see that a person could have just maybe drawn this trend line and saw this break and he traded this buy. But it is not a good trend line break buy, reason being the price has not exhausted yet, right? So this guy bought over here and he was liquidated. His stop loss was hit as price moved down because they were still selling momentum. But I do see another trend line over here. You see, now the person who traded this trend line break is clever because he understands that this trend line break occurred after sure exhaustion, signs of exhaustion appeared in the key point of interest. So there's nothing wrong with trend line breaks, okay? But you need to understand that let the trend line break at least show signs of exhaustion, meaning you actually want one that is in the form of like a base, really. Okay, so this price action here is not impulsive at all. Can you see? It's forming like a round bottom, all right? Showing you that the selling momentum is being engulfed by the buyer somewhere in here. You can see that things are tilting slowly round, right? And you can pinpoint a trend line in your key point of interest. And when it breaks, you have better chances of getting the best entry. Compared to this trend line break, you can see that this is what we call a liquidity grab, right? It's a liquidity grab because it fooled the dummies. It fooled the dumb money that wants to buy firsthand, that wants to buy, that wants to be the first one into the market, okay? So this always happens. They know that the person who bought here, his stop loss is right here. And so what they do is just shift the market down and they liquidate them, and then the real move comes, okay? So it's very important that you realize that this move right here, this first trend line break, it doesn't show exhaustion, but this second trend line break shows clear signs of exhaustion. You can see that price is struggling. The buyers and sellers are literally having a fight in our key point of interest, and it's forming a round base. It is obvious that a round base price action is not price action that pierces through our zone. It is clear, right? But a price action that could pierce through our zone is something that has got this impulsive nature, right? This shows clear exhaustion and an entry would have been made here. You see, that's why it's very important for you to assess your key point of interest on the higher time frames. You mark it, and then you wait for price to arrive on your lower time frames, and you wait for exhaustion, then you're fine. So now the person who entered here, right? He's going to be in profits for a very long time. Why? Because remember, his key point of interest was a daily order block, daily low, because he knows the Dow theory and he understands that price cannot really break this low as yet. We're still in an uptrend on the daily. And imagine that he got his entry on the H1 time frame and he is in a position to enjoy profits for the next 2 or 3 days of a good entry that was analyzed via exhaustion. All right. So that's basically it, guys. Let's just look at another chart. Let's see if we can look at a market structure and see if we can get an exhaustion phase in our key point of interest that we can take advantage of, right? Okay, so let's clear all these drawings, right? So in this type of market structure, this is the daily time frame. Remember, we always look for market structure on the higher time frames, the H4 and above. It's obvious that this is a downtrend. Even if we were to ask a toddler what he sees, he could tell you that this is a downtrending market. Everything is down, so we'll be looking for sells at highs. All right, so quickly, Dow theory, right? Where our lower highs and so forth, lower highs and so forth, right? So I'll just pause here quickly. Let's just check this high right here. So this is a high, right? And price moves away from this high. So the thing that we do, as I've mentioned, is that we find the order block at the high, right? That becomes our key point of interest. So our price is all the way here. We have our key point of interest ready for us, and we just want to scale down to the lower time frames when price gets here so that we can get an entry after exhaustion, after the momentum in here has been cleared. Let me tell you one thing. All right, just looking at this chart, let's scale down to the H4 time frame quickly, and I'll show you exactly why this is important. So you can see that this is our key point of interest for sells, sorry, and price is moving in, but look at the nature in which it moves into our key point of interest. It's impulsive. It's impulsive in such a way that it wants to trick lower time frame traders like M30 or H1 traders that this is a buying market. Someone who doesn't have the daily perspective will not know that this market is about to drop. Okay, so this impulsive nature is to make sure that you would never think of selling. So this is the herd. This is the 90% of traders that lose. But someone who understands market structure is looking for sells in here after exhaustion. So now let's look at how exhaustion appeared in this example. All right. So like I did say, you don't want to be the first one in the market when prices reach your key point of interest. That is the dumb money that will be at play if you do that. So price gets into our key point of interest. If you're an early seller, maybe you saw these two selling candles and you said, I'll sell, which is ridiculous in my opinion. Maybe you're an intermediate person who thinks that this little 5-hour resistance or 5-hour consolidation here means you should sell the market now. You're also very average as a trader. All right. Rather spot exhaustion. Exhaustion, especially one that involves liquidation, that includes liquidation, is very powerful. It's a very powerful entry confirmation. So you can see price got into our key point of interest, right? The guys who sold here, right? They got liquidated by this move. That's the first liquidation, right? Then these guys here who sold here, they got liquidated by that move, right? That's the third liquidation. So you can see that there's already some liquidation happening. Stop losses are being hit. There's a lot of manipulation in our key point of interest. And that is only because the market is still exhausting. There's still buying momentum coming. Remember our train trailer? There's still buyers in the market that are being matched by the sellers that are obviously enough in our key point of interest, but the process has to follow proper procedure. The market cannot just turn yet. So a clever trader would have waited for exhaustion. In this example, a clear sign that the market is exhausted, in my opinion, would be forming a structure within the key point of interest. All right. So you can see that as soon as this structure was broken, you can safely say that exhaustion has taken place and there's been some liquidation in the key point of interest. You can safely trade this knowing that you will be in good amounts of profits. All right. You can see that, right? Another thing is maybe you could have seen this trend line break here. If you want to be trading the trend line breaks, what makes this trend line break even more attractive is this impulsive move here, this buying impulsive move over here that came to confuse the lower time frame traders who are seeing this as such a buying market, who will be waiting over here. And you know what the market has done? The market has returned to the trend line over here and given them a pin bar, somewhat a doji candle, a signal that they're taught in their textbooks that, look, you buy. But what they don't know is we're in a key point of interest for buys with price action that has shown exhaustion, right? And we should be looking for sells and they get liquidated too. So proper clever trader, this is your sell entry. Or obviously this is a game of practice, but if you start looking at exhaustion before you take a trade, you'll be in a better position. All right, guys. So as usual, I'm not taking much of your time. I thought I'll just share this quick one for you as we go into the new week. Trade the exhaustion from your key points of interest, guys. All right. And as usual, as I always mention, my mentorship program is going ahead. Feel free to contact me, WhatsApp me. My contact details are in the description of this video. WhatsApp me, and then we can discuss how we can get you on the mentorship program. I also have my trade alert and setup group where I send alerts and zones in which people should be taking trades from on a daily basis. So you can always contact me for that, and then we can take it from there. Ciao, guys. Thank you.